Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Thursday, the 18th of November. Starting off with Avacta, which looks as though it may be seeing the light in terms of the bull argument. We've got that line of resistance just breaking there around £1.20, which was, I suppose, the obvious range top there. We've also, perhaps more importantly, had an end-of-day close above the top of the initial November gap down at £1.16. So the end-of-day close above that gap close buy signal, along with the break of the 50-day and that June resistance line. That suggests that at least while we're above 116, looking towards that July resistance line projection, currently pointing as high as £1.53, which seems rather ambitious, but sometimes it pays to have a positive mindset. On to Braveheart, where those with a positive mindset may have not been too happy until today. The shares breaking that line of resistance there from the end of April. And quite interesting in the sense that you can see the volatility went really low ahead of that move, and we've now exploded to the upside. It'd be good to see an end-of-day close above the old October resistance and the 50-day moving average at 33.6 pence. If we can get that, then we're looking towards, logically, the 200-day moving average at 48, maybe over the next 2 to 4 weeks, or perhaps even sooner, the way things are going, maybe by the end of the month. So looking pretty set fair for Braveheart. We're a fan of the shares and want to dream of higher targets than maybe that line there from beginning of August up towards the 70, well, it's about up to the 70 pence area. Could be on the cards. That would be like the top of that notional triangle that we've had since August. On to another stock which is going great guns at the moment, Chamberlain. Here we already had the break of that resistance line there from April, so just tidying that line up a bit. I suppose you could say that was around the 7.25 pence level. The stock also motoring today. We'll see if it's a coincidence or not with Braveheart. And end-of-day close above the mid-October resistance, 7.75 pence, and the 50-day moving average, if I can get those words out, will hopefully get the shares up to retesting September resistance around 9.25 pence, maybe over the next week or two. Best case scenario for the shares over the next 1 to 2 months, maybe up towards 12 pence, which is the top of that post-April triangle on the daily chart. Onto a stock which has not been kind to shareholders, and interesting that shares actually jumped by a third today off the back of an announcement which was good, but perhaps there have been better announcements in the recent past which have not had such a decent reaction. Here we've broken that line from July, and also we are threatening to get a gap close buy signal. The top of the gap there from the beginning of last month at 15 pence, an end-of-day close above 15, could take the shares up to the main post-October resistance at 20 pence over the next week or two, even if the shares then fall after that. But we've had actually an island reversal, which is a gap down followed by a gap higher, and that is one of the strongest technical charting buy signals around. So 20 pence regarded as the minimum, perhaps at this stage up to 25 pence. Fitting that late September gap could be the best case scenario target for the shares. So it looks as though something at last positive is going on at Chill on a technical basis, if nothing else. Moving along to C4X and the rally that we've had, anticipated by that June resistance line break and the 50-day line break that we had just a week or two ago. Current situation is it looks as though we're in a bull flag here for the flag around 41 pence, and that should be enough to give us a move up towards the top of that broadening triangle from March as high as 55 pence over the next couple of weeks. The stop loss back below 40 or 41, that kind of thing for that particular situation. CyanConnode is next, and I think, as I said before, doesn't seem to be much interest in the shares on on social media, but who cares about that? The stock has done very well indeed. We had an initial target there at the top of that rising trend channel from the start of the year, around 19 pence, and that was hit about a week ago. We had an optimistic target there at the March resistance line projection, which has just been hit now at 29 pence. So I'm not sure whether I dare go any higher in terms of the target, but I suppose we could be looking at the upper 30s in that July resistance line projection if we can get a weekly close, say, tomorrow above 30 pence. So above 30 pence, the possibility of a best case scenario target by the end of the year up to 40 and that July resistance line. On to Hummingbird, where the shares had a rather nasty looking island top there, a bull trap island top through the 200-day moving average, double top as well. So it doesn't get worse than that. But the good news is that for November, we've had a higher support above the 15 pence level, and a weekly close above the 50-day moving average at 17 pence could be enough to allow the shares to head back into the low 20s, maybe filling that gap up to 21. Even if they then fall back again. If you're a fan of the shares, you'll see that there is a broadening triangle that you can draw from March. And while we don't make any new lows, there is a chance of the upper 20s, again, as a best case scenario target over the next 1 to 2 months. But that is rather ambitious, and maybe one takes that with a bit of a pinch of salt at this stage. On to IronRidge, where I suppose the great mystery is why the shares are still around the either side of the 20 pence level. The market still being rather mean in terms of the valuation here, but we can break that line of resistance there from January around 23 3/4. There is a chance eventually, maybe early next year, to see the shares up to the upper 30s, 37 pence at the top of that rising trend channel from this time last year. Good to see Mode Global deliver in terms of the recovery that was penciled in with the bounce off that February support line. I highlighted that, I think, earlier this week or last week, that kind of thing. We had also a divergence there in the RSI window, so we're suggesting that the shares could deliver a rally, and they have, and a gap through the 50-day line. Pretty impressive while we're above that at 38 pence on an end-of-day close basis, looking for at least the 200-day moving average at 46 pence. Best case scenario target up to 60, maybe on a 1 to 2 month basis, but obviously it's still rather early days. Going on to a stock which has had its, I think it's had one or two critics for some reason, I'm not quite sure why, but interesting charting position here at Netzero. It's obviously got the coolest ESG or sort of COP22 friendly type name, but here we've got a break of that line of resistance there from October, call that around the 3.7 pence level, and while we're above that, looking for at least a move towards the 200-day moving average at 4.4 pence, just for starters, maybe over the next 2 to 3 weeks. Stock which is rather more high profile than Netzero is Novacyt, and here the shares, I suppose it was a bit of a mode type reversal here with the bullish divergence. We also had a bounce off an extended support line there. Say actually that the initial target here has already been hit, and that might explain why the shares are actually now flat on the day. So hitting that line there from October around £3.17. And so if you're a fan of the stock, you'd want to see no end of day close back below the 50-day moving average of £2.70. Let's see if that holds as support. Above that, you've got 3.17. Then obviously we have a chance then of filling the gap back in September up towards 342. So the levels here really 270, 317, and then up to £3.43 on Novacyt. Just a couple of stocks to go now. One is a bit of a lap of honor, a stock which has just kept on getting stronger and stronger, Panthera. Here we broke that line of resistance there from September and the 50-day moving average at 11 pence. We were looking for up to the 200-day line at 14 pence initially, best case scenario target up to 20 pence, and that March resistance line projection hopefully over the next 2 to 4 weeks or less. Finishing off with Valerix, which had its moments at the beginning of the month with that spike up to, what was that, 64 pence. Current situation, it looks as though we've got some decent support here, just at and around, well, at and above the 30 pence level, just above the 30 pence level, in fact. So with the latest bounce for the shares, I suppose we've got an end of day close stop loss back below 30 pence, but otherwise we could see the shares up to at least the upper 30s, even if they fade away again off the back of that persistent support just above 30 pence. That's it from me today. More updates tomorrow.